Hello everyone, welcome to the weekly forecast on gold. Links are all in the video description. VIP service, free Telegram channel and my personal link. Now let's just go straight into the weekly forecast for the week, and then we'll go over what happened last week, how we can read price and when we can get in. So if we go to the higher time frame, we've still got that bearish bias. We're still looking for a continuation down, and we're still looking to target this doji candle on the daily time frame, which is at 2276. So that'll be the first target I'll be aiming for this week. Clear continuation down going into this week, and we got a nice big bearish move on Friday to validate that. So that's showing the higher time frames are clearly bearish. So that's your first target. Then we got the opening for April, which is at 2245. Then on the higher time frame, we'll be targeting this liquidity here, and then we have the main one down here at the monthly opening, and that is the monthly opening on March. So the main reason we're targeting this is when you get the daily time frame and a new month opens and it pushes straight in one direction, normally it comes back to that candle. If it doesn't, it leaves behind liquidity at that level. So that is why this level is a target, and that is at 2043. So if we go to the higher time frame, those are your targets. First one here, then the next one is this gap, and then we have smaller time frame liquidity here, and then we have the opening here, which is also looks like the opening of the year. So the yearly opening there, and on daily you can see it there. So that is what we're doing this week. Look for a retracement at the start of the week. We have CPI news and PPI news. If we go down to the 4 hour, what you can expect is a retracement somewhere around here, because this is the start of the manipulation move, and then you can expect a clear continuation down. And those targets that I just explained would be your first areas of interest, and that is on the daily time frame. So that is my weekly forecast for this week. Now let's go over why. 4 hour time frame, let's clear the chart up a bit. So last week, you can see on Friday we got a big bearish move. A lot of people messaged me before this move happened asking what hell's going on with gold. So this will explain it. So this moved here. So we had the previous week, and then we had the start of last week, which was creating liquidity. It does this when things get confusing on gold and you don't know what it's doing, and you're getting your strategy is showing weakness. That means it's starting to make a move and then it fails and comes back and takes you out. And it does this a few times in a row. What that is doing is building up your mental stress. It's making you emotional, so you over risk and you do things that you're not trained to do. So the people that have discipline and usually trade very good and make good profit will be put under pressure during these times, because it really tests you. And what it does is create more liquidity for the big companies. They are creating liquidity so they can move big volumes into the market. So if you've been watching my channel for a while, I know a lot of people still watch it, you will notice that here we have the consolidation phase that I mentioned in a lot of videos. This push up is your fake out, and then the impulse move that happened on Friday is your impulse move down to follow the true direction. Now the story is, this is your all-time high, the push up here, then the fake, then the push down is your true move. Before price can continue, it has to create liquidity, which it does here. It builds up liquidity, leaves behind liquidity here. This was a clear sign at the start of the week. Normally on gold, it will always take liquidity before turning. Here it doesn't. Same here. So price comes up, collects this liquidity, retests this breaker block, and then you got the impulse move from there. So this move up is your fake out. Collects liquidity and retests a prime area to continue the sales. That's why when it hit this area, it waited for the London session and New York session to input all that volume towards the downside. By watching this, by seeing this, it clearly shows you that they are inputting a high volume of sell orders over a long period of time. This is not a short movement. It's likely to continue over the next few months. Now we can get rid of these lines. So that one got taken. We had these marked up. You can see that one got taken there. These are smaller time frame liquidity pools. So when we go to the higher time frame, what you have is a simple all-time high collection here, then a reversal. On the smaller time frame, we consolidate in this area. It builds up orders, then it's released towards the downside, and that's when the true volume kicks in. That's why you got this impulse move down. We create liquidity, fake out to the upside, another impulse move down. So what this is doing, this fake out to the upside, is retesting this sell area to input more orders. So let's say they have sell orders from up here, and now they have sell orders from this area here. It doesn't have to come all the way back up to that area to add more sell orders. All it needs is like a little retracement here, and then they can put in more sell orders from another institutional level. So that's why we're looking for a retracement there, followed by a continuation down. So what you'll end up with is a chart that shows like that. You might get a few days of consolidation, and you might get an impulse move just before CPI news. It can happen. Then CPI news will continue to push down. That's what I'll be looking out for this week. Now let's go to the weekly time frame, and you can see it in even more clearer detail. So now I can get rid of the arrows. Sorry if I'm waffling on a bit. I hope I am making some sort of clarity on what's going on. So what you have here is let's get an arrow up actually. That's a bit better. So what we have here, this is your consolidation candle. This is a whole week's worth of data. So that's liquidity candle. This goes into the next week, pushes up, takes liquidity here. Then this is your impulse move down. So that is one bearish manipulation candle. Goes into the next week. For the whole week, we see liquidity being created. And that one candle is this whole week's worth of data, where we didn't really do much, went sideways and created liquidity on either side of price. Then we go back to the weekly candle. This one here is what happened last week. We got a bit of messing around at the start, push price up, takes the liquidity from the previous week. That's your fake out, and then you got the impulse move down, which happened on Friday, which is your continuation down. So on the weekly candle, weekly time frame, you have 4 candles showing you strong bearish direction. And if you look here, you got a weekly candle here showing liquidity at that level at 2276. So this week, if we get a retracement up at the start of the week, it should be very easy profit to make the sales which are continuating down. It's quite a good setup. If we do get that retracement on Monday, then see that as a very high probability continuation down. And I wouldn't be taking profit any before any of these levels, especially 2276. That is my first partial profit area taken. I know a lot of people get into the move and they will take profit after a $5 move, and they think, oh well, I could have just held on, but I got emotional and just wanted to make profit. This is going to be a big move. If we get a retracement, you should be able to get at least, if we retrace back above 2,300, you should be able to get about a $30 move towards the downside. It all depends on what the setup is before CPI news. Are they retracing, which I expect they will do? And are they then continuation down? Or are they going to take this liquidity first, then retrace? I hope we get the retracement before taking this liquidity, because that will be a better setup. One more thing before I go. We got this big downwards move on Friday, as you all know. Now let's go to the daily time frame. You can see here it dropped all the way down and bounced off this little line here. Let me just change the colour so you can see it more clearly. Let's put it in a yellow. And you can see this bounce here is exactly where the monthly open is of May. So the monthly opening takes place here, which is the yellow line. And you can see on Friday we dropped all the way down to that level exactly. So if you don't believe the markets are manipulated and being controlled by a thought out system before any news has taken place, then that kind of shows you they wasn't in the market already here pressing the sell button and sell button all the way down to this level. It had already been programmed into the system. So price fell all the way down to the monthly opening, which is a key level. You can see how that bounced off that level straight away and then came to the close. What that shows is they're still in sales, but they're just bouncing off that little key level going into the weekend. So these are big orders that are still in the market. They haven't taken profit or adjusted their positions. They are still in sales from up here. So I hope that makes it clear. When I say believe the charts are manipulated and controlled by a system, algorithm, sort of thing like that, it doesn't mean they do not follow fundamentals. It means the algorithm controls the price action that is developed, that is shown on your chart, and the fundamentals behind that algorithm adjust that where prices are going over the next few days or weeks. So let's say the interest rate news changes this week. What that will do is then they will plan to change the algorithm, the outcome of the algorithm over the next few weeks to adjust to that change in interest rate news, if that makes sense. It won't be done all within like 30 minutes. It will already be programmed into the price action for that following day or week. So that's why I focus on the technicals. I do follow the fundamentals, but mainly what I see on the chart, especially leading up to a high impact news event. If you focus on the technicals and read the price action correctly, you can predict what's likely to happen with a high impact news event. Well done if you made it to the end of the video. That's my opinion. That's how I like to trade, and that's what shows me the best results. So yeah, message me if you've got any questions. I could go on talking about this sort of stuff for ages, but I've made the video long enough. This week, look out for a retracement at the start of the week, followed by a continuation down going into the middle of the week. We have CPI on Wednesday, PPI on Thursday, and then the weekend on Saturday. Take care. All links are in the video description below.